Hey, what is going on everyone? My name is Nick, and in today's video I'm going to be discussing one small cap renewable energy stock that has the potential to 10x or more over the next decade. And that company is known as Greenlane Renewables with ticker symbol GRN.TO, which has recently been uplisted to the Toronto Stock Exchange over here in Canada. However, despite being listed on Canada's biggest exchange, this company is tiny, only having a fully diluted market cap of 185 million Canadian dollars. Therefore, we can see just how volatile Greenlane Renewables has been ever since going public back in June of 2019, where it began trading at 27 cents per share and is up 340% since. Soon after COVID struck, the stock blasted off to an all-time high of $2.67 per share, while more recently it's tumbled back down 55% to $1.19 per share, despite the fundamentals remaining strong. So what makes Greenlane Renewables such an attractive stock to buy in 2022? Well, in today's video, I'll be answering that exact question after taking a deep dive into Greenlane Renewables stock. So if you do enjoy the video, don't forget to drop a like, and if you haven't already, please consider subscribing so you don't miss any of our future uploads. And with that being said, let's jump straight into the video. Alright, so what you need to know about Greenlane Renewables is that this is a Canadian renewable energy company focusing on decarbonizing two huge sectors: the natural gas grid and the transportation sector. Now, if you've ever been to Canada before, you'd know that the weather can be unrelenting in the winter, and without many other feasible alternatives, natural gas remains a staple to the Canadian economy. And the same goes for many other parts of the world, which is why Greenlane Renewables' mission is so critical to help defeat global warming. So essentially, the company has innovative solutions allowing them to extract renewable natural gas, or RNG, from biogas, which is then immediately ready for pipeline and engine use. Here we can see bio-waste is produced in large quantities from sources like manure, food waste, and wastewater sludge, which is then converted to biogas through a digesting process. Then at this point, Greenlane steps in and sets up the appropriate biogas upgrading system to extract the RNG, which could be one of 3 proprietary technologies, including water wash, pressure swing adsorption, and membrane separation. And finally, the RNG is ready to be used in the energy grid or the transportation sector essentially immediately. Now that's all fine and dandy, but why do I personally believe that Greenlane Renewables stock is a great buying opportunity right now in 2022? Firstly, Greenlane Renewables has quite a large total addressable market, or TAM, which according to the International Energy Agency will cumulatively be worth $90 billion of biogas upgrading equipment by 2050. And as we can see in this chart, Greenlane Renewables is currently the top provider in the world when it comes to supplied biogas upgrading capacity. So even if they were to capture only 10% of the $90 billion in biogas upgrading equipment sales, that would represent $9 billion in cumulative revenue by 2050, which is over 100 times their current cumulative sales. Also, with renewable energy trends in Greenlane's favor, along with government regulations becoming stricter and stricter when it comes to carbon emissions, this is definitely going to increase Greenlane's TAM opportunity over time. Secondly, Greenlane's revenues have been growing at ridiculous rates over the past few years, where in Q3 of 2021, which was the last quarter, revenue grew 107% year over year to 13.4 million Canadian dollars. The company also has a huge sales backlog of over $47 million, which will eventually be realized and converted to revenue at some point in the future. Moreover, they report a sales pipeline valued above $850 million, which are potential projects that could eventually convert into sales within the next 24 months. So overall, it's quite clear that Greenlane Renewables is seeing strong demand at this point in time. Now, the third reason I think that Greenlane Renewables is a great stock to buy right now is because back on December 23rd of 2021, Greenlane announced a contract with FortisBC valued at $12.1 million for a project at a landfill in Vancouver. Not only is this a huge contract representing nearly 1/4's worth of revenue, but Greenlane Renewables has gained a significant amount of credibility through this deal since they have been hired by BC's largest utility company. So if the work progresses smoothly and the project ends up being profitable for Fortis, this could lead to many more deals down the pipeline with Fortis or other utility companies across the country or the globe. All right, now fourthly, Greenlane has lots of cash on the balance sheet, over $35 million in fact, while they have no debt, which is a great combination for such a small and fast-growing company. And you know what Peter Lynch says, a company cannot go bankrupt if it has no debt. So this also eliminates a lot of risk from this investment, which small cap stocks are notoriously known to have. Fifthly, I believe that Greenlane Renewables stock is getting quite undervalued now, and check this out. The best valuation metric to examine for a company having a lot of cash and very little debt on the balance sheet is typically the enterprise value, which can be calculated by taking the market cap and subtracting the net cash on the balance sheet. So we can calculate Greenlane Renewables' EV to sales ratio by subtracting the net cash of $35 million from the market cap of $186 million and dividing that answer by their TTM sales of $47 million, which gives us an EV to sales ratio of 3.2, which is quite low for a company growing so quickly. And finally, Greenlane Renewables is on the verge of full profitability, having earned $52,000 of net income in Q3, but this should get much better as their margins are continuing to increase since revenue is growing 3.2 times faster than their G&A expenses. But now let's hop on over to TipRanks to see what analysts are thinking about Greenlane Renewables stock. So as of now, there are only 2 analysts covering Greenlane Renewables stock in total, but on average, they have a 12-month price target of $2.63 per share, which would represent 121% upside. However, if we only consider the top analysts covering this stock, that would give us a price target of $3 per share, or 152% upside. And although there are only 2 analysts currently covering the stock, there have been 6 analysts that have issued buy ratings on Greenlane Renewables in the past, with the lowest still having potential upside of over 89% over the next 12 months. Also, it can be a huge benefit that not many analysts are covering this stock because not many investors therefore know about this stock. So essentially, this is presenting an early buying opportunity for many investors to get in before Wall Street actually realizes this is a great buy. And of course, once more analysts start covering the stock, there's going to be more money flowing into the stock and the stock price should rise. We can also see that TipRanks bloggers are also very bullish on the stock, where 3 bullish articles have been written about the stock, while there have been no bearish ones. So all of these factors from TipRanks data definitely reaffirm my bullish thesis on Greenlane, and as such, I plan on taking this dip as a buying opportunity. Overall, I think Greenlane Renewables is a solid small cap stock to buy right now, having no debt, tons of cash, and a huge sales backlog to allow them to continue growing for many years to come. So let me know down in the comments below if you plan on buying Greenlane Renewables stock, or if there are any other renewable energy stocks that you would prefer buying over this one. Let me know. But anyways, if you did enjoy the video, don't forget to drop a like and subscribe if you have not already so you don't miss any of our future uploads. And with that said, I will see you guys in the next one.